get to our guest today and get his opinion. Arjuna Mahendran, HSBC Private Bank's head of Asian strategy. He joins us from Singapore. Arjuna, where do you stand on this Yuan debate? Revaluation versus devaluation, trade surplus versus trade deficit. I mean, what's going on here? What are your thoughts on this?
Well, I think, Haslinda, we have to view this whole debate within the context of inflation. It's as simple as that. In China, we are seeing inflation rebounding quite substantially. It was 1.5% in January. It was 2.7% in February. My forecast is by April or May, we'll probably reach 5.5% on consumer price inflation in China. Now, what are the policy levers the Chinese central bank and government have to contain this? First of all, there's a big drought in Sichuan province, which is the breadbasket of China. It's spreading to other parts of northern China, so food production is being affected. That is pushing food prices up. And by raising interest rates, you can't increase food production, as you know. So I think the potential for policy revaluation of the renminbi is rising for the simple reason it'll mean that Chinese imports of food and other essential products will be cheaper in yuan terms, and therefore the inflation rate could be curtailed to some extent. So I reckon sometime in the second quarter, between April and June, we'll see the Chinese move on the yuan. Of course, they're also mindful of the fact that Chinese exporters are currently experiencing wafer-thin margins on their profits. Apparently, a move of about 2.3% on the yuan could almost wipe out their profits if they were to revalue the currency by that much. So I think they're going to take baby steps starting sometime in the second quarter to raise the value of the yuan against the dollar. But nevertheless, it's not going to be a significant one-off appreciation or anything like that.
Arjuna, they say there's a 50-50 chance the U.S. will call China a currency manipulator. What are the implications? Does the U.S. really want to take that risk?
My personal view is I don't think they will move that far. Now that Mr. Obama has got his healthcare reforms through, I think the Congress in the U.S. is probably not necessarily training its guns on foreign adversaries, if you like, to sort of deflect attention from domestic political issues. But having said that, I think, definitely the small and medium scale industry in the US is facing a problem. That problem mainly arises from a lack of bank credit. The banks are still not lending money to that sector. And I think the Obama administration has sent out signals now that they want to, address that problem from the bank credit angle rather than just going on and on about Chinese revaluation, etc. Yeah.